Good morning, guys. Armand from Cool Trading Tools here. So we're gonna go over the market today a little bit. It was kind of a I didn't find it a particularly interesting day yesterday. I took no trades yesterday. I didn't have really a gauge on what I wanted to do. I think that was the right move. I think some things started to appear. So let's kind of dig into a couple things we're going to talk about today. The couple news events from yesterday is the theme did pick up. We'll go into that. That I think is worth watching on quantitative easing starting a little bit from the Fed. We can talk about that, what that means, what it could mean a little bit, and then we'll go into a couple other things on like just keeping watch lists and different groups of stocks, and maybe a couple trade ideas as well here. So let's get started on the market. So really, the market is kind of a nothing burger right now. I don't see any edge directionally. SPY, like I said, we talked about it yesterday. And it was why I didn't really have that much interest in it. It was breaking out to all-time highs, which looks great, but it's being led by sectors like financials, the oil stocks, healthcare stocks, biotech stocks, not hot stocks, which usually for day traders, which primarily I am, you want to be trading momentum names, which is why I primarily am following the NASDAQ and semiconductors. Those have a lot more volatility to capture good day trading movements on. So wasn't even though SPY is breaking out, it's not particularly the best trading environment for my style. I guess ideally you could say it's good for rotation because whenever tech is pulling back, you want to see the other sectors coming in place. I mean, I don't know if the oil sector going up a lot is really good for the market overall, but whatever. So let's start with the quantitative easing news, I think, yesterday. So we'll talk about this. I'm not an economist here, but okay, so essentially, quantitative tightening is when the Fed is selling assets off their balance sheet, which is generally negative for the market. Quantitative easing is, and this is a super simplified version of it. Quantitative easing is when they're buying assets for the market, essentially supporting the market. And now that usually is a bullish thing, and my historical experiences with that, whenever this Fed gets involved in quantitative easing, I mean, that was a huge thing back, for example, in 2020. The COVID crash happened. What did it do? The Fed ramped up quantitative easing and started buying up assets. And what do we go? We go on a massive 2 year bull market. It's a little bit of a different situation right now. And I also think it's a different reason why the Fed's getting involved. From my research, it comes down to a couple things. The bond markets were crashing, you know what I mean, yesterday to some pretty low rates. We won't spend too much time on this, but what is the reason then for that two things from my research? The US debt is going up a lot, which implies the bonds essentially are a loan to the US government, which means that the people that are buying the loans, the governments around the world, the companies, whoever's buying the bonds, is expecting to get paid back with interest. And the US has never defaulted and maybe never will. They'll just print more money to pay it off until whatever happens. But the U.S. debt's kind of going up exponentially now, $40 trillion, whatever it is. It seems like fake numbers, but that's showing a disinterest in U.S. bonds because people are like, well, fuck, am I ever? I mean, these governments, for example, you got to picture like a government like China or whoever it is. I think they do purchase a lot of our bonds. They may pull back on it because like they're like, well, what the fuck is they buy enough where it's like trillions of dollars, billions of dollars. Is the government going to be able to, US going to be able to pay us back in 10, 15, 30 years? I don't know. They think like that in that sense. Essentially, then bonds are not really finding a bid because people are like, well, the US is going in tons of debt. And this is just a speculative narrative that I was seeing, and I can see the logic behind it. Um, and then another thing too, corporate bonds are taking a little bit more precedence right now with a lot of the data centers getting built out around the United States. Corporate data center bonds. So corporate companies also sell bonds to people, and those usually get a better rate of return because they're likelihood to pay back is depending on the company. It's all there's a bond rating system, but better than other companies. But usually the U.S. government is always like the highest rated because you're always going to get paid back. So corporate bonds, though, to build these data centers, have been taking some of that market for people who want to buy into that type of market, bonds and that type of investments, credit investments. So yeah, so I think that we'll see. It wasn't a huge increase. They're buying whatever from I think 2 billion to 4 billion increase. It's not like actually that much or whatever it is. Doesn't matter. We need to get too into it, but something to keep an eye on. Or just if you're just interested in this stuff like myself, I like to follow it. I don't really plan too much trades around economics like that. But it is something to be a little bit interested in. Whenever the Fed's getting involved, you want to kind of keep an eye on like what does that mean. So, like I said, usually quantitative easing is a bullish thing. Right now, the market's not necessarily reacting that bullish to it. That being said, we're just range bound, and I don't think that there's a ton to from our short term day trading perspective, which is what this channel is going to be about and what we're doing primarily, or short term swings. I wouldn't know there's a ton of actions about that. Maybe we're something worth thinking about from an investment perspective as well. But anyways, so yesterday, like I said, I sat on the sidelines because I didn't see a ton that I wanted to do yesterday. And I said, I think in X post, I said, let's just see what shapes up after the day. And what I think was good is we did see a theme pick up yesterday. Bitcoin had a huge move yesterday. So I've been marking out this base from, whatever, 2021, 2022, had this range here, and it's been ranging there pretty much the last year, right? And I'm on the weekly chart now, but yesterday Bitcoin got a huge move off this base. So what does that mean? It's not out of the weeds yet, but this is, I would say, a pretty bullish thing. I believe it has something to do with Bitcoin Source. There's a crypto what was it? A crypto conference at the White House, right? And now it remains to be seen, is that a short-term pop or a long-term event, right? We'll see on that. But what I think that you can do is, this is what helps in these situations. I want to get in this lesson is we can look at Bitcoin stocks and look for buys, right? Or cryptocurrencies as well, depending on what you prefer to trade. But one thing I always like to do is I keep my personal watch list of like China stocks, crypto treasury stocks, AI stocks, Bitcoin stocks. You want to keep lists of stocks. You can go ask AI to make a list of 20 stocks or whatever it is for you, or go do the research on Google. But it's good to have these, right? And what this does is it saves you time because you don't feel, and it also saves you motivation because you don't feel like, oh, I got to go find all these stocks. I have this list of 30 or 40 stocks that I can go look at and see, okay, what are the buying opportunities in this? So it's always good to make lists of stocks, even if you don't use them for 6 to 9 months. Themes rotate. The one thing might be hot for a little bit, then it's not hot anymore. But it's nice to have those for when these things come up so you can go through them. So, and kind of, save yourself some time and motivation, and then, you can keep building on that and keep an eye on the check on that and check in on that list every once in a while. So, a couple Bitcoin stocks I was watching here. MSTR directly correlated with Bitcoin. I mean, and one of the things that's funny is I wish I would have thought, because it was about 2 days ago or 3 days ago, but just before yesterday, there is this thing on X, this investor on the MSTR's investor call. I saw that it came out, and he directly asked them, like, what the hell's going on here with MSTR? I invested 70 grand for 3 of my kids at whatever the price was, and essentially put $210,000 into his kids, somewhere around up here. And he was directly complaining to Michael Saylor on the call, saying now that investment is worth 60 grand. And Saylor pretty much said something like, if you want a safer investment, go into S key, whatever. What is the thing? Oops. Go into their credit instrument. They have like a loan interest dividend type thing. He said, should they pay out MSTR pay a dividend now? And Saylor said, no, we're not going to pay a dividend now. If you want a dividend, go into what is it? Micro strategy. STRK, right? These are like dividend type things or whatever. I don't really know. Something where they essentially, I don't know the whole structure of them, but you get a dividend, right? And the main reason I'm bringing it up is it felt like a max fear event. The sentiment in MSTR is so negative now. You know, it's down more than Bitcoin, 85% at its worst. I mean, that's a full blown crash, right? Like full blown crash. But it's a good lesson, right? When euphoria is at its highest, it might be a good idea to take profits. When it's at its lowest, it might be a guy like, okay, is this actually a thing where we can look for a turnaround trade, right? Based on emotions, right? So MSTR, I think, is a good one to watch. So right now, I don't think there's much to do on these gap ups necessarily, but let's say Bitcoin is breaking out of this range that we're looking at here, right? It comes back and back tests this range. Ideally, we push a little higher and comes back and back tests. We can start to look at names like MSTR for a pullback and back into its range for buy opportunities. Let's take a look at the weekly charts and monthly charts. Yeah, I mean, not much to say about that. You can kind of see what we need to look at on here. Hut, another one I was looking at for a couple reasons, right? Comes into this technical support, has a hammer candle hold, 200 SMA nearby, as well as the previous all-time highs as a test. So right there, that's what I call confluence. So it's a good thing to be aware. Even if you don't trade a certain strategy, it's good to understand what other type of strategies traders trade. So 3 different types of traders: ones that might buy 200 SMA pullbacks, ones that might buy previous all-time high backtest holds, and ones that might just buy the short-term technical support or gap fills. Right here's a gap fill. I guess I didn't even actually notice that one. So 4 different types of supports there. That, even if you don't put too much heat in that, being aware of that, and then if you see something that aligns with your specific strategy, then that is going to be confluence, because you say, okay, even though I know my strategy gives a signal, I can get a little extra confidence because I see there's 3 other different ways: 200 SMA, gap fill, previous all-time high test, that are also offering a support for this trade, which is going to get other traders involved. So I feel like I have that tailwind in my back, gives me a little extra confidence, right? So Galaxy is another one. Circle. So these are just saying, now that we see the move on Bitcoin, maybe it's worth building that list out to see what happens when we get our first pullback in Bitcoin. It's been in a bear market for a couple of years now, or whatever it is, a year plus. Well, it's been in a bear market for longer than that, but in a base for about a year. Do we start to come out of this base? It's better to prepare now and see what we can get in the first pullback here. The next one here is Bull. I actually talked about the stock a while back. I was talking around this area here. I'm not in the breakout, unfortunately. They're never clean, right? You know, broke out, came back. It chopped around. It just wasn't necessarily super clean. I mean, it actually kind of was, if you were able to get it maybe a little bit on this pullback or something like that, or, you know, you could, whatever your method is to get in. But I think this is a good breakout on this for a couple reasons here. First off, it's earnings yesterday, causing the gap up. Technically, it looks really good as well. So we got the weekly trend change continuation, monthly trend change continuation. This is what I'm talking about with confluence too, depending on traders. Some might use the daily chart, some use the weekly chart, some use the monthly chart on swing trades. All 3 of those are now uptrend confirmations on this gap up, right? So more people can be looking involved. Like I said, I don't think you buy anything up here, but you look for the first pullback on that. You also, I think, have a couple of fundamental themes with PDT getting eliminated earlier this year. That's going to cause more retail traders to get back involved. 2 of the biggest servicers of retail traders, like smaller accounts. So that was the rule. You needed $25,000 in an account to day trade minimum, reduced now to, I think, 2 or 3,000. Essentially makes it much more available to other people to actively trade. Webull and Robinhood are 2 of the biggest servicers of that. Hood's already been on a monster run last year and is also basing out and kind of starting to form its own uptrend here. I think Bull has came down quite a bit since its IPO and starting to kind of turn around story possibly in that. So you have the PDT rule changing as well as this move to 24-hour trading. You see all these you see the market and the Nasdaq announcing, trading sessions from 9 p.m. to 4 a.m. There's essentially we're moving towards 24-hour trading, right? And what does that do that's good for brokers? More executions, et cetera, et cetera. So I think there's a fundamental narrative along with that, alongside the technical narrative. So I think that's a good one to be watching on. It's also its first pullback earnings today or yesterday. Watch first pullback in the 9 EMA, and that could be a potential buy opportunity depending on your technique to get in. So awesome. I think that'll be it for today. It's getting a little long-winded here. You guys have a good trading day, and I'll see you tomorrow.